Hey, good day to you. This is Stan Prochowski with Prochowski Estate Law, Prochowski Elder Law, and thank you for requesting my property protection checklist. This is the checklist that you supply some information to me, and I hope do an analysis to figure out how much of your property I can protect and when. So I'm going to do a little overview of filling out the property protection checklist. So let's get right to it and go to that document. All right. This is the property protection checklist. Here at the top, nothing too complex. Give me your name. I need a date of birth, address. This is important whether you're a veteran or not, because if you're a veteran, you may be able to use aid and attendance, whether it's you or your spouse. Date of service is important because you have to be a wartime vet. We can go into the definition of that later. I need to know what you have in place now. Current information. Do you have a trust plan, you or your spouse? Do you have any long-term care insurance, you or your spouse? Are either of you in the nursing home, yes or no? This is important because this tells me the difference between pre-planning and crisis planning. Pre-planning is when neither of you are in the nursing home and we're really not knocking on the door or expect to be there soon. Crisis planning is when somebody is there or just about to go. So it changes a little bit about what we do, but if this is a yes, I'm going to need the cost of care. Okay. Now, this is just a little synopsis of your health. You know, is it good, bad? Where are we from a health circumstances standpoint? This may need a little explanation. Have you given away any assets in the last 60 months? Now, what we're looking for is an uncompensated transfer. That's from the Medicaid Act. Uncompensated transfer simply means, have you given away an asset for less than market value? Now, an example of that would be if you decided to deed the property to your children and you said, here, I'm going to deed it to my son Joe for love and affection and $10. That is an uncompensated transfer. Now, if the house was worth $100,000 and you sold it to your son Joe and he gave you fair market value, $100,000, that would be a compensated transfer, and that's not what we're looking for. So what we're looking for here on the screen is, have you given away any assets in the last 60 months? That's 5 years. We're looking for uncompensated transfers. If it's yes, please give me a total. And when I say total, I would like to have the combined sum total of all the ones you did in the last 60 months. Put the date down here when that happens. Add extra lines if you need to, so we can make sure, because if it's at 61 months, it falls out of the jurisdiction for them to look back. So we don't want to be penalized for anything we don't have to be. All right, a little bit about the family. Do you have kids? Which ones are living with you? Are they dependent? Are any of them disabled? All right, now we're going to look into your expenses. If you have a monthly income, you and your spouse, stick it up here. You, your spouse, and total. As we go through the assets here, this is cash, checking, savings, CDs, money markets, etc. That's your liquid money in the bank, that sort of thing. List those here in total. Brokerage accounts, stocks, etc. Those are things like Edward Jones, Raymond James. I'm not talking about retirement accounts, specifically investment ones. Fidelity, something where either you have some stocks in there or money, or you have, you have somebody else buy and sell different stocks and they just send you a quarterly statement. Give me the totals of that. Qualified plans. These are the ones where you haven't paid the income tax yet. So that's your 401ks, your IRAs. If you have those, list them here under qualified accounts. Life insurance. Now, if you have term life, that doesn't help as much. But if you have a whole life or global life, they usually have a cash surrender value and a death benefit. If you know what those are, put those in the table right here. Annuities. If you're collecting an annuity, let me know about it. Here's your home, fair market value. I'd rather you don't just take a stab at it. You might want to go to the property viewer and pull the tax sheet. If you pull your last tax card, it'll give you an appraised value. Don't panic if that value looks low. The tax assessor's office, I find, is usually about 20 to 20% low. So don't say, hey, that's not right. This is just a value we need to know. Here we'd like it to be on the low side. So other assets, looking for one automobile. If you have more than one, list the value of your most used or most expensive one. Then total them up where we can. Down here, if you still have an indebtedness on your home with a mortgage, let me know about that because that's something we can exempt. Monthly living expenses. How much do you think you need to live every month? Put it down. I guess total for spouse is more important, but And how much do you spend a month on medical needs? Now, what that is if you're paying for Medicare A and B, that'd be 100 and some bucks a month, whatever it is. Or if you're paying a certain amount for medications. If you're doing something on a monthly basis for medical needs, put her in there. Now, that covers the property protection checklist and how to go through it. Pretty self-explanatory, not very intrusive. So again, if you fill this out and get it to me, I can do an in-depth analysis of the stuff that you own, all the things we put on this sheet, and I can tell you what I can protect. I can tell you when I can protect it. Some stuff I can protect immediately, as soon as we enter it into a trust. Other things, we may have to wait a term of years to satisfy the government. Just depends on what you have. It's entirely circumstance-driven. So thanks again for requesting that. Just fill it out and get it back to me, and I'll do the analysis, and I will contact you. Thanks again.